Welcome back. I'm Daga McDowell in for Maria Bartiromo. It's Friday, June 14th. We've got breaking news coming up in less than a minute. We're waiting on retail sales numbers for May. Economists are expecting an increase of 0.6% in the overall number. You take out autos, month over month, we're expecting a gain of 0.3%. Analysis straight ahead, plus the numbers. 37-point gain on the Dow futures. Futures are pointing to a lower open, weighed down by tech. Chip makers under pressure after Broadcom warned of lower sales due to the Huawei ban. I want to welcome two of our analysts who are here. Erin Sykes is here, retail sales analyst, and also Bert Flickinger, Strategic Resource Group Managing Director. I'm not going to ask you any questions because we only have 15 minutes, but I want to bring people up to date. Good to see you, Bert. Erin, good to see you. We're going to get this number in about 10 seconds. I want to remind people that the markets so far are up this week. We have a little bit of a pullback, but watch how those futures react, because is good news going to be bad news? Is good news on this number going to mean that the Federal Reserve does not cut interest rates? Retail sales are up 0.5%, so that's a slight miss. And ex-autos, give me that number again. 0.5% gain, excluding autos, which would be a beat. So better than expected, excluding autos. Top line number is up 0.5%, 0.5%. And you're watching these markets. The market's not much of a reaction here. So in line, better than expected on ex-autos, and then just a slight miss. But again, this is after what was a decline in retail sales in the month of April. So a bit of a bounce back here in May. Ex-autos better than expected. Bert, just your initial reaction to this as we get more details.
Dagan, as you referenced, strong retail sales from a strong economy. And while internet sales are growing about 10%, autos doing better, homes doing better. The categories to really watch out for are sporting goods, down about 9% as America's playing sports less, getting fatter, affecting everybody from Dick's Sporting Goods to GameStop and others. But the retailers in off-price, where they can show consumers great savings, the retailers are winning, and there's no real effect from tariffs so far because prices are only up 0.3% on an import basis.
So here's some more good news for you, and you see this showing up in the U.S. futures. April, I said it was down. Well, it was revised to a gain from a loss in the month of April to a retail sales gain of 0.3%. And for the month of May, 11 of 13 major categories to the plus side. Erin, your initial reaction?
Well, I think this number is being driven by high-end luxury sales and then by mass market sales. We saw that yesterday with Restoration Hardware, Lululemon, Dollar General. There's not much traction in between. So those are the areas that I would continue to look at to see positive gains. We had an incredible increase in March. I do think that we, of course, have priced in the rate cuts already, so would be concerned if they don't actually happen.
So, Bert, so the question here is how do retailers actually adjust their supply chains with the tariffs coming up, right? I mean, we've got back to school coming, and so that's a looming threat that's out there where it's like, listen, a lot of the shoes, for example, were going to be coming from China, and now with tariffs, how is that going to throw off, consumer spending, especially when it comes into critical months like August and September?
From working in the supply chain, it can literally move country to country. So South Asia, Vietnam, et cetera, traditional manufacturing countries. So it's a tough game of proverbial chicken, but China ultimately with higher prices is going to lose support. Also, the retailers are strategically smart, so they've had tremendous inventory builds, and with overcapacity in manufacturing worldwide, while supplies will be tight, they'll still be sufficient for back to school 1 in July and back to school 2 in August, to your present points.
Okay.
Lindsay.
You did see a rebound in non-store retail, which declined last month, and that's your Amazon, your online retailers of the world. So that's certainly a positive. Do you think that the online presence is really cutting into prices? Because when you look at the inflationary data, apparel hasn't really seen much of an increase because I think of the Walmarts and the Amazons of the world.
Lindsay, you're raising key points. Is with price discovery of consumers, they can find the lowest prices, whether it's off-price, TJX, Burlington, Macy's, Offstage, Amazon, as you referenced, now Walmart.com, an absolute powerhouse online, and with Target announcing lower deliveries same day, next day, yesterday through Target.com. The internet sales, we did a survey at Cornell where I teach in retailing and marketing, and 50% of consumers surveyed across the country do no shopping in bricks and mortar stores, and of those, half in Amazon. So with Amazon having a 38 share in online and Target, Walmart, others, Costco racing to catch up, you're right, the prices are going down because consumers are smart and they're even better educated than before on price points and where the value is, either online and or on land.
Erin, I want to bring you in here because do consumers have some real strength in the months ahead? I'm watching these refinancing numbers, that applications to refinance homes, because mortgage rates have fallen so dramatically with the 10-year yield close to 2%. They jumped in the most recent week 47%. So does that leave American consumers flush heading into the summer?
I think they are relatively flush because we have high employment. We missed the number a little bit last week, but we really are strong economically. And in terms of the letter to the president, Walmart, Macy's, Target, et cetera, we will definitely see, I think, those numbers be flat in terms of their prices because they command whatever price they want. From the middleman, they'll take the cut. It's not going to be an issue with those large-scale retailers. Where we're really going to see the issue is with that mid-size and smaller retailers that can't carry the tariffs. So, yeah, I think that we're still strong, and we have a positive outlook ahead in retail.
Bart, you were shaking your head.
Yeah, Erin called it completely correctly in that what we'll see, to your point, Dagan, is consumers refinancing, lower gas prices, more OT or overtime at work, increasing employment, increasing disposable income, and as you and Erin and Lindsay referenced, so many choices. U.S. is 400% overstored in square footage in retail. Manufacturers are over capacity. With price discovery, there's deflation. Prices continuing to come down. Tariffs a concern, but de minimis in terms of cost to consumer. And as you, Lindsay and Erin referenced, still full speed ahead in terms of sales growth.
And I'll point out this editorial that Andy Puzder wrote in the Journal today, and it's something that we've talked about over and over again, how wage growth in lower paying industries for non-supervisory employees, that's where the wage growth has been, that those wages are growing faster than, say, supervisors. And that gives a broad consumer base a lot of, as my father would say, walking around money.
Exactly.
And those are the consumers that are more apt to go out and spend the money, too.
Right.
So you'll see it come through in these retail sales numbers. But, you know, I could pose the question to both of you guys, who are the winners there? Because you kind of talked about it. You're seeing the high end, like Lululemon, doing really well, and then also the discount retailers doing pretty well also. So is it just those on the high end that are getting into the online space are being successful, and then everyone else is going to the low end retailers, or who's the winner?
Lindsay, it's an interesting bifurcation that off price is winning, price impact, extreme value. But the other bifurcation is the retailers that have the best socially responsible retail programs using rooftop, ground mount solar, specifically Amazon and Aldi, Walmart and Target, BJ's and Costco and IKEA. They're taking the money they're making and saving from solar, rolling it into lower prices, so tariffs are de minimis, and the retailers winning with solar, best price, best value. And through a social click survey, we're seeing over 20% of consumers switching to retailers that are socially and environmentally and responsible with solar, and that's why BJ's to Walmart to Target to Amazon to Costco, as well as IKEA, are winning, and these other guys crying the blues about tariffs are kvetching about stuff when they could control their own destiny. the way the socially responsible retailers do, and the rest of them, especially in the food and drug and chain drug sector, supposed to be worried about health. They're like Fred Flintstone and Barney Rubble in the Stone Ages with Mr. Slate at Slate Bottom Creek doing nothing environmentally.
It would take an extra block, Bert, to unpack that analogy. But I love you for it. Kevin, I want to get you in here.
Yeah, I think it's pretty fascinating when you're looking at retail sales because it's all about the omni-channel, right, and also providing an experience because it's like the consumer is going into the store right now and they're expecting an experience and to build their relationship with the brand because the store is the gateway to the consumer, and I think that's it. I think this whole ESG thing is just a small little dangle. I think it is mostly, like we talked about Restoration Hardware. You go in there, you can eat. Environmental social governance, right? It's that whole socially responsible stuff where Bert was talking about solar panels. I could give a hoot if they have solar panels. I would like to go there and have an experience and feel connected to the brand, and that's what Restoration Hardware is doing after the earnings we saw blowout, because one of the reasons why is I can go in there, I can get a nice latte, I can walk around, I can do this stuff, I can eat, I can whatever. When you talk about Ross, when you go to Ross, you walk in there, it's a treasure hunt, right? Like you find a bargain, you get excited about it, you do that. Kohl's, get people in there, they can return from Amazon. So I think that's the key ingredient here.
Kohl's great solar leader too, to Michelle Gass's credit.
But again, you know what? I do care about solar if it means my prices stay low when I'm shopping.
And it does mean lower prices because they're reinvesting the solar savings and lowering prices and locking in their energy costs for 20 years when electricity and utility costs from wildfires to storms are skyrocketing.
This is where, again, the private sector has the solutions and has the implementation, that it's not like somebody from on high in the government coming along to save all our lives. Jack?
Yeah. I walked into my local Whole Foods, and literally they wiped out half of the cash registers. So now you can just go there and scan out. I was down in New York. They have an Amazon store. There was one person working in the entire store. You didn't even, all you had was your phone. You tap in, you go in, and you leave. Is this what the new retail is going to look like, brick and mortar wise?
Jack, that's the new retail, and Amazon, Whole Foods combined are leading it. Full disclosure, did the due diligence worldwide for the first buyer of Amazon, so they're catching up and now eclipsing everybody else. So you're bringing up really key points.
Hey, Erin, final word to you before we go.
Sure. Well, I think Restoration Hardware is the absolute case study with how to win in this market because of those Instagrammable moments, as well as their membership plan, and then also their plus 35 in online sales. They're going to open 15 stores in China. So they're going to actually change their production and move it into the U.S. So I think it's all about being proactive, and they're doing it right.
And I will end on this. So Net-a-Porter, it's a luxury retailer online, redesigned its app, and it's awful. It doesn't work, and it makes it much more difficult to use, and they don't present the sale merchandise. They have to hide it from you, which is just horse hooey, number one. Number two, the Real needs to do a better job of photographing the merchandise, because I bought a lot of stuff on sale from them and had to throw it in the garbage.
No.
So again, there's a lot of we act like that these online retailers are going great guns and doing a terrific job, but again, like, don't take that for granted. And I think some of these companies have taken it for granted.
Quick one beyond tariffs. The great merchants used to, Bloomingdale's used to do a whole year focusing on goods, people, culture, and art from China, and then they do France, and then they do UK, et cetera. And as the government leaders meet with key leaders around the world, why not feature the countries we're trying to negotiate with, rather than fight on tariffs, and help them with their goods, and like you guys said so well, the branding, the way Marvin Traub and Michael Gould and everybody did every year at Bloomingdale's. And your great points on Restoration Hardware.
Right, Restoration Hardware, it is a case study.
Yeah.
Good to see you, Bert. Bert Flickinger and Erin Sykes, thank you so much. Investors, meantime, eyeing tensions overseas, but it is not taking a toll on the markets. Stuart Varney weighs in. And portable shots. Yeah, liquor shots. One company changing the game with high-end prepackaged drinks.